Yes, that conference call kicks off in just a bit, but joining us here first, ahead of it, is Chewy CEO Sumit Singh. Sumit, great to have you back on the show. Market reaction, not great to these numbers. It looks like expectations were very high around guidance, around the customers, which was the miss, and the top line. How do you explain it?
Hi, Sarah. Good to see you. Good to see you. Good to be here. We are really bullish about the business, and the story and the strategy has not changed from the several times that I've spoken with you, right? Let me tell you a little bit about that. So we grew revenue 27% over a year last year where revenue was growing 45 to 50%. So we really like the momentum in the business. The consumer is healthy. Where gross ads this year are running about 20% higher than where they were in 2019 levels. And what's equally exciting, or even more exciting from where I'm concerned, is customer spending on our platform is at an all-time high. In fact, in Q2, customer spending was $404, which was up 14% on a year-over-year basis. So what does that tell you? More customers, they're spending more, they're staying with us longer, and we continue to deliver very strong comps. So overall, we're really pleased with the performance of the business and the way that the teams are operating amidst this difficult environment. So happy to enact the strategy that we have in place.
There was this feeling, though, this narrative, Sumit, that it was as good as it gets for a company like Chewy, between everybody being at home and shopping online, everybody adopting pets and spending a lot on their pets as they were home with their pets, and that was bound to slow, that kind of growth rate in terms of how many customers you'd get and how much they were spending on the site. Is that something you're seeing as we do reopen?
Yeah, so we're seeing two things, right? So as I said, gross customer ads are actually running higher than pre-pandemic, but yes, they are running lower than what we saw during the peak of the pandemic, and that was expected. Number two, what's really interesting is when you look at traffic, overall online traffic towards the pet category, Q2 traffic was flat to a little bit down, but traffic to Chewy's website, to homes, actually up 1%. That tells you two things. One, that the consumer inflow to our platform and their buying behaviors are strong. Secondly, it tells you that we're actually share market is reeling from the post impact of the highs of the last year. But on our platform, we see engagement being pretty strong, and we see customer conversion are actually strong.
It would be predictable that you might have a slowdown in finance. What does that your need spend more to get that ramped up again? I look ahead toward how the financial model evolves as this business gets larger and as it continues to grow on the top line, because at the moment it's projected to be sort of profitable into next fiscal year. But what are anticipations in terms of margins can do better as this gets bigger?
Sure, my question. So when you look at let's P&L down, right? When you look at it at a gross margin level, where you actually see the impact of customer engagement, our broad offerings, the expansion that brought to the market and relative to their assortment, or the new services or products and solutions that we've launched, benefits all margin expanded another 200 basis points, reaching all-time highs for the company. That tells you that the momentum and the engagement is really high. And then you're talking about, the EBITDA, which actually slowed down monthly. We're going to use 2 times EBITDA that we did last year. And on a 2-year basis, we're going to incrementally deliver $300 million of more EBITDA than we were doing in 2019. So the story is actually pretty clean cut, which is, the current macro environment, given the pressures and the incremental investments that we're making in wages and benefits to be able to get, folks into the warehouses, and the incremental pressure or the spend on marketing, which we are seeing as a result of ad tremendously in 2021. That's sort of where the EBITDA is getting hindered a bit, right? But when you look at the gross margin, overall momentum performance of business, it's intact and it remains pretty strong. So we're very bullish about the future, both from a top-line point of view, and we're guiding to 80 to 100 basis points EBITDA expansion on a year basis. So our guidance is intact.
I'm reading a shareholder letter now. Interested in this announcement around Chewy Health. You're launching a marketplace for vegans. This is going to work and what it's going to add to the business.
Yeah, we're very excited about it. It's a revolutionary service that we're bringing to the market. And it's a private curated marketplace where the veterinarians essentially get exposed to 20 million Chewy customers. They get to list their offerings and their products on Chewy.com, set their prices, approve prescriptions, and earn as a result on the back of improved customer experience. I believe it's pretty industry defining because shopping's either done in the mail or it's being done. Here we are bringing a solution to the that actually full e-com opportunity to and collaborate with a leader like us. So in some way, we're staying true to the mission of making pet care more affordable and accessible to all pet parents in the U.S.